Long term, I'm still very, very bullish. Again, as long as our government can't get it together and stop spending money. And I mean, I know we've heard about this Department of Government Efficiency, but I have this healthy aspect of skepticism when it comes to anything political, where until I actually see it imposed, I'm not going to believe that it's going to happen, because politicians have a way of wanting to be reelected. And when they make spending cuts and people do more poorly, they tend to not get reelected. So I would love to see cuts in government spending. I think most Americans would. But the question is, will it actually happen? I'm hopeful it will. But until we see it, gold is still the place to go, and really longer term Bitcoin as well.
Gold prices climbed sharply on Tuesday, reaching a two-week high during midday U.S. trading. The rally is driven by technical buying and supportive fundamentals, including increased demand from China's central bank and potential new economic stimulus measures from Beijing. Additionally, safe haven demand stemming from ongoing tensions in the Middle East and political instability in South Korea has added bullish momentum to the yellow metal. Despite the strong rally, technical indicators suggest caution. A seasoned market analyst, Gareth Soloway, notes a trend line connecting recent lows, forming a pattern resembling an upside-down flagpole with a flag. This typically signals bearish consolidation, reflecting sideways price action. However, the recent upward movement in gold, achieved without significant weakening in the US dollar, indicates that other factors, such as geopolitical uncertainties and market sentiment shifts, influence the market. While the rally is impressive, analysts caution that bullish momentum faces challenges. In a recent interview with Kitco News, Christopher Vecchio, head of futures and forex at tastylive.com, emphasized that February gold needs to push above $2,725 to solidify its short-term bullish stance. The gold market has seen increased trading volume this year, with prices rallying nearly 30%, but broader investor interest remains subdued, potentially limiting further upside. From a long-term perspective, gold remains a compelling investment. Persistent concerns over government spending and fiscal mismanagement continue to position the metal as a reliable hedge against economic uncertainty. Gareth Soloway highlights skepticism surrounding meaningful government reform, further bolstering the case for gold as a safe haven asset. The U.S. federal government's spending has reached staggering levels. In the most recent fiscal year, from October 2023 to September 2024, the government spent $6.75 trillion, according to the U.S. Treasury. This sustained fiscal strain reinforces the long-term appeal of gold for investors seeking to protect their wealth. As gold prices hover near recent highs, bullish fundamentals, geopolitical uncertainties, and cautious technical signals set the stage for a dynamic market. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Right now, it still looks like it's just hanging on to that bearishness here. And you can see, again, you have your trend line connecting the lows and here. And this really, again, if you look at it like an upside down flagpole, we've all heard about bear and bull flags. This is your upside down flagpole, and this is your flag right here. So as long as we kind of stay in this sideways chop, it still does have a little bit of bearishness to it. But I do think it's an impressive rally today in gold. The dollar's not really falling, so it's not the dollar that's doing it. The question I guess I would have is this because Bitcoin is falling? Are you seeing a rotation of capital, which we've seen in the past when Bitcoin does really well? I mean, what's fascinating about this, just to touch base, the high on gold here, which was your all-time high, was back at the end of October going into November. And what we know is that Bitcoin started its bull run at the elections right here on November 5th. And so you almost get this sense that there's a little give and take where money goes into Bitcoin when it's hot, but then when Bitcoin cools, that money comes into gold. And I think there could be something to that and maybe what we're seeing. But suffice it to say, even having said that, the pattern specifically on a technical analysis basis is short-term bearish, but you do have support here. We can look at this beautiful parallel channel where the highs connect right through here, and you have these lows. And as long as you don't break this, then you would be buying pullbacks on gold here, even if you dip down to about 25.90. Long term, I'm still very, very bullish. Again, as long as our government can't get it together and stop spending money. And I mean, I know we've heard about this Department of Government Efficiency, but I have this healthy aspect of skepticism when it comes to anything political, where until I actually see it imposed, I'm not going to believe that it's going to happen, because politicians have a way of wanting to be reelected, and when they make spending cuts and people do more poorly, they tend to not get reelected. So I would love to see cuts in government spending. I think most Americans would, but the question is, will it actually happen? I'm hopeful it will, but until until we see it, gold is still the place to go, and really longer-term Bitcoin as well.
Silver prices made a notable jump on Monday, with spot silver gaining 4.6% within 10 hours to reach $32.268 per ounce, marking its highest level since the sell-off following the U.S. election in early November. By Tuesday's North American trading session, silver was consolidating near $32 as investors awaited pivotal developments, including China's closed-door annual Central Economic Conference on December 11th and 12th, and the release of the U.S. Consumer Price Index data on Wednesday. The consolidation phase reflects investor caution as the market seeks direction from potential policy signals out of China and insights into U.S. inflation trends. According to Bloomberg, the outcomes of these events could significantly influence near-term silver price movements, given their implications for industrial demand and broader economic sentiment. The backdrop of heightened geopolitical tensions adds to silver's appeal. Israel's recent military action in Syria, aimed at neutralizing potential threats from Syrian rebels, has escalated volatility in the Middle East. Historically, such geopolitical instability bolsters safe haven demand for silver, further supporting its price. Market analyst Gareth Soloway emphasizes balancing short-term caution with long-term confidence in silver's potential. He notes that while technical patterns and economic uncertainties suggest possible near-term volatility, silver's enduring value as both an industrial metal and a hedge against financial challenges remains compelling. Let's get back to the interview.
Yeah, so I do think it definitely acts much more like an industrial metal, but we still see that same sort of thing where going into November, when Bitcoin and crypto took off, that's when silver started to come in. Now, again, same sort of pattern. It's not as clean as the gold bearish pattern, but this is your flagpole down and then this sideways chop. And notice how this high-end trend line right here, and I have these lines drawn in just to kind of show the pattern formation, but essentially this line is parallel to this line, and that's where silver has stopped today. So as long as we stay below this 32.15 level on silver, you would anticipate a pullback to the downside here, maybe even a retest here, maybe another move up, and then eventually that move to the downside. And again, I'm still a skeptic on the U.S. economy overall, that at some point we're going to have a recession. Whether it's in early 2025, late, or in 2026. You can't postpone recessions forever. There's no such thing as that. We have boom and bust cycles. And so at that point, I would be concerned that silver could take another leg down. I'd be a buyer around 27.75. There's a lot of support there. And again, 5-10 years with fiat currencies going the way they are with printing and debt, I think silver's a lot higher. Shorter term here, I'm a little skeptical based on the price action and the patterns. I think that's the kicker is there's this beautiful trend line going back to October of 2023, which really was that beginning of this incredible run to the upside, right? And what we saw here is this, initially it got away from this trend line for a long period. It came back, kind of did a double tap, smaller bounce, a little bit bigger bounce. And then what we've seen here is it broke down, and then this line becomes resistance, getting rejected every time it gets up in there. So
the dynamic movements in gold and silver prices underscore the ongoing interplay of technical signals, economic policies, and geopolitical events shaping the precious metals market. As both assets continue to navigate these complex factors, their roles as safe haven investments and reliable stores of value remain firmly in focus. While short-term fluctuations may arise, the broader market trends suggest significant potential for long-term resilience and growth. What are your thoughts on how economic policies and geopolitical uncertainties might shape the future of precious metal investments? Share your insights below. Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.